Hello and welcome once again to the Smart Money, Dumb Money Show, and I'm your host, as usual, Keith Richards. I am Chief Portfolio Manager, President, and Technical Analyst with Value Trend Wealth Management. And today we are going to be talking about some opportunities in the global markets. Now, I have my stock charts program. Many of you who study technical analysis probably subscribe to something like stock charts, and they allow you to have different collections of stocks that you can use to regularly rifle through and look for opportunities. So I've got one for commodities, I've got one for international markets, I've got one for sectors on the US markets, sectors on the Canadian markets, etc. So I have a process of periodically rifling through these collections of charts, looking for opportunities. And if you've ever taken my technical analysis course, you know that an opportunity can come in the form of either a range-bound security that moves up and down in a pretty defined trading range, or it can take a place in the way of a breakout. So let's say a stock was maybe in a bit of a downtrend and broke out. That's another opportunity. And then the third thing is to look for an uptrend where there's a trend line test. So the markets come down a bit, tested successfully off of a trend line, and that can be an opportunity as well. My favorite way of trading stocks is in range-bound type of securities. And because we're in the midst of a bear market right now, it's pretty hard to find a lot of uptrending stocks and uptrending ETFs and uptrending global market indices, but you can find a few, not many, but a few sideways trading stocks, which are really fantastic for trading in and out of. And I literally went through every major country index in the world, and I found 4 such opportunities. So not many of them, but they're there. So let's get right to it, and we're going to share screen, and I put together, as I often do, a little bit of a PowerPoint presentation. So we'll start from the beginning. And so there's 4 opportunities that I have identified for you to consider. So let's get started with Chile. Now, again, these are not the only ETFs out there that represent these countries. You can go online and you'll probably find half a dozen of ETFs that represent these countries. I'm using, for the most part, either the iShares or sometimes I use the spiders, because they're very well traded and well known, and it's just easy for me to keep track of on my list. So Chile has been in a sideways consolidation period literally since the COVID crash. So you can see that the market was moving down on Chile, and then it washed out in that COVID crash. And then since then, it's really the ETF has found a floor somewhere around $21, $22 and has found a ceiling pretty neat and tidy. You can see, like, over and over, somewhere around $30 to $31. Like, again, with any trending or range bound or what have you type of pattern, you're going to see what we call spikes and tails. And so every once in a while, you're going to get a break of the pattern. And here you had a break in early 2021. But for the most part, oops, I didn't mean to do that. So I'm just going to go back before we get to the next one. Oops, there we go. Okay, so we did get a spike early 21, but for the most part, if you looked at trading this particular ETF somewhere out near $30 and somewhere in the low 20s, you could be making money. The beauty of a sideways trading stock is your parameters. So if it breaks to the downside, say you ended up buying Chile somewhere around today, $23. I'm looking at it on, I think it's the 16th or 17th of October. And let's say you bought it around $23. Well, that's great. You want to trade it out to 30, but what if it fails? Well, fine. Here we had a failure back early in 2022, but it didn't last that long. So you might know my rule of three. If $22 or so breaks by at least 3 days, but I typically look for much more than 3 days before I sell out, you will have a good stop loss point there. So you can stop out if the stock doesn't work out the way you planned. So it's a pretty easy pattern. You know your upside, you know your downside, you know your stop point. So Chile did have that run in early 21 because they are a commodity focused country, and you can see, you know, commodities were doing very well, oil and metals during that year, and they did top out, and you can see sort of a sideways range since then, but not a bad trader, and I do think that commodities will continue to do well. Mexico. Now, Mexico has had a couple of periods where there have been consolidation patterns, like from 18 to 20. There was a consolidation pattern marked by these two black lines. And then after the COVID crash, there's been another consolidation pattern between around $44 to $50 on this iShares ETF. Now, there are lots of other Mexican ETFs, so you can look at them all, and I'm not particularly endorsing this one. As I said, it's just the one I tend to look at. So the beautiful thing about these charts that we're looking at is that we know that the market's been in a downtrend. So if you look at the TSX or the S&P 500 or most indices anywhere in Europe, they're going down. But these things are going sideways. So they're actually a fairly predictable pattern within a world of chaos. And that really interests me. So again, Mexico right now is kind of near the bottom of its trading pattern. So interesting observation. And I think it's another one that's definitely on my radar. Now, I don't own either of the two stocks that we just talked about, but I do own this one, which is Brazil. And we have been trading this pattern, and you can see that somewhere in the mid-20s is the place to buy, and it's been doing this for quite some time. I mean, literally going back to 2018 with that interruption by the COVID crash, but I almost write that off. That was kind of an anomaly. So generally speaking, Brazil seems to have a high in the high 30s and have a low in the mid-20s, and it's a pretty darn tradable ETF, and it's a pretty darn tradable country. Now, they have a major position in Petrobras, which is an oil and gas producer. And so I think it's 30% of that index, if I'm not mistaken. So obviously you're looking at oil prices when you're looking at this particular ETF. But nevertheless, you probably know that I'm bullish on commodities in the longer run. So I don't mind holding this. And if on some potential it broke out past that high 30 point, I'd be a holder. More than likely, though, I expect to be selling it, and it's kind of in the middle of the range. So the best opportunity on buying Brazil right now is probably past us, but there's still some upside. Again, mind your stops. Keep tight stop losses on this stuff, because if they break, you don't want to be caught with a negative trade. Okay, finally, India. Now you can see way back again, back to the 2018 to 20 area, there was a consolidation pattern. COVID came along, boom. And then here we are again, and notice the floor, the support level on this ETF. Again, it's the iShares ETF. It's somewhere around 40 bucks is where this ETF likes to come down to. And then it'll move up. Now, unlike the other patterns we just looked at, it's not sideways. It's actually been in a declining trend, very much like the S&P 500, but there's much more of a defined floor on this. So my thoughts are, this is kind of looking to me like the stock will end up somewhere near $40 if the market continues to be soft on a global basis. But that will probably represent an opportunity for, at the very least, a return to this declining trend line that I've drawn here. Oops. But in my opinion, India is a potential stock or potential ETF in the making. So it's not one I'm buying, but it's most certainly one that I'm watching, because it could move up to that trend line we were looking at a minute ago, and then it could break out eventually, which would be very bullish. So very worth watching, not necessarily worth buying today. You have to do your homework on all of these, but this video maybe gave you 4 new ideas to consider for your watch list. Thanks for watching, and we'll be back again next week.